there and kind of what you think some of your predictions may be for the year coming up. Yeah, I see a lot of great results coming in. Thank you guys for doing that. A lot of these questions that are being asked on the poll, we're absolutely going to go over today. So let's see how well you do. All right. So we'll share those in just a minute. So you guys still have a few more moments to keep doing that. But let us get started. So good morning, everybody. My name is Anthony Vulin. I have been in the real estate business for about 20 years, and I'm so grateful for the opportunity to have a business like this that allows you the opportunity to create your own path to building wealth. I'm the owner and broker of the Collective Realty, and that's the mission of our office, is creating paths to wealth through real estate, through helping our agents to do that and through helping our clients to do that. There's so many different ways that there's so many different amazing paths that real estate has created for me to create paths to wealth through real estate. And that's what our mission is. And that's what we're trying to help you all be able to achieve as well. So welcome, so happy to have you. I am your 2022 president for Greater LA Association of Realtors. I'm super excited to lead our association of 12,000 members next year. If you'd like to join us in celebrating in January, we're having our installation. We're going to be on the rooftop of the London on January 13th at 5 p.m. The event always sells out. The event holds about 300, so it sells out pretty quick. Tickets just went on sale. And if you'd like to be there and celebrate with me and the installation of the rest of our board of directors and have a really fun night, we would absolutely love to see you there and have you join us. I graduated from UCLA about 20 years ago and got right into real estate. And some of my favorite classes were statistics and economics. And this business has really given me the opportunity to study that more moving forward. And, you know, I've really learned that you have to have quite a bit of data behind any type of assumption or prediction or forecast that you're going to be making for any type of market. A lot of us here are realtors, and some of us are investors and homeowners, and we all have kind of maybe talked about, oh, you know, everyone says, what's the market going to be like next year? Are prices going up? Are they going down? And we have, let me just, if you don't mind muting yourself. And everybody just has, you know, questions on what's going on next year, and we all have answers for that. So
Anthony, we can't hear you.
Can you hear me now? Yes. Okay, thank you. I see that. So I'm so sorry about that. Hopefully I wasn't muted for too long. But basically what I was saying is, you know, at UCLA, when I studied statistics and economics, all of that has really come into play into what's happening with our real estate market and the real estate forecast that we're going to talk about today. So as realtors, it's our duty to make sure we have informed information before we just tell people, oh yeah, prices are going down next year, or yeah, we expect inventory to go up in the next month or so. Well, why are you saying that? Where are you getting your data from? Is it just because you heard another fellow realtor say that, or a friend say that, or you heard it on a headline on a news report? But what's really happening? And we all know that real estate is localized as well. So if you hear national stats, it really doesn't affect what's happening here in California and especially in Los Angeles. So we're gonna break a lot of that down for you today. So why don't we get right to it? Marshall, if you don't mind sharing the survey results of what a lot of you guys were able to take while you were in the waiting room, and let's kind of review that just before we get started. You able to share it?
It should be sharing the results now.
Does I don't see it. Okay, so Marshall, why don't you read to us? Because I'm not, you should be able to share it so everyone can see it, but why don't you read to us each of the categories in the, oh, you all can see it? Maybe it's behind the screen somewhere. Okay. I'm not sure why I'm not seeing it. Marshall, can you read me?
1 second.
What?
Give me 1 second.
Okay. All right, let's take a look at this. Thank you. Okay, awesome. So who's here in the room with us today? You have the opportunity to check several boxes. We have about 54% of us are realtors, 22% homeowners, 34% investors. I love that. And 8% future homeowners. Amazing. In 2022, home prices will, okay, so 16% say remain steady, 40% says rise slightly, 10% say raise over 10%, 32% decrease slightly, and 2% say decrease more than 10%. So we're kind of spread, that's pretty wide range, right? So only one of those things are gonna happen next year, but a lot of us have opinions on many of these things. Okay, so number 3, in 2022, inventory will increase, remain the same, or decrease. Okay, about half of us think that we're gonna have more increase of inventory. That's good, we're all optimistic and hopeful that we'll have more inventory. That's absolutely something we need. And 32% say remain the same, and 18% say it will continue to go down. In 2022, interest rates. This is always a big question that everyone is always asking. Interest rates will remain about the same at 3%, 30%. Wow, you guys are really split on this. Interest rates will go down. Only 6% say it's going to go down. Remain at 3.5%, about 34%, and over 3.5%, 30%. Okay, so we're absolutely going to have the opportunity to talk about this. Hold on one second, I'm just letting this guys in. To discuss this and get some more accurate numbers. In 2022, the #1 buyer group will be investors. Okay, I like that. 28%. Foreign buyers, 6%. Move-up buyers, 20%. Millennials, 32%. And Gen X, 14%. Awesome. These are great guesses, and some of you are right, and some of you, I don't know, are kind of interesting answers that I'm seeing. So we're going to review a lot of the stats and help you get a clear picture of what's actually going on right now and what a lot of the big economists are thinking are going to happen for next year. So thank you guys for filling that out. And now I'm going to share my screen and let's jump into the data. Okay, here we go. All right, do you all see, Marshall, do we see the screen now?
Yes.
It's shared? Okay. Oh, not the full screen?
Oh, I have a different screen.
Okay. Are you guys seeing a full screen of our first graph? I'm so sorry, this is... Is it sharing, Marshall?
We can see it, you're saying.
Yes, the full screen, okay. I don't want you to see my whole messy graph, but I want it to look pretty for y'all. We have almost 100 people with us today, so welcome everybody, and thank you guys so much for being here. This is also being recorded, so in case you want to review this or take a look at it later, it'll be on our YouTube page. You can just search The Collective Realty, and it will be posted by the end of the day. So let's get started. Okay, so let's talk for a moment about last year. I'm gonna skip this one. Let's go one more over. Oh, it is not.
No, it's not moving.
Okay, here we go. So in 2020, this is how we ended the year, the one that's highlighted. We ended up at an actual increase in the amount of properties that were sold, which was pretty amazing because that was our first year of COVID. Can you believe it? First year, now we're in our second year. About 3.5% increase. And price change. Last year, prices went up over 11%. Who would have thought that, right? We would have absolutely thought prices would have gone down. They ended up going up 11%. And now when you look at the second column, I hope you guys can see my arrow as well. In the second column in 2021, the forecast was that we really thought, you know, the amount of homes that sold this year would go up slightly. The amount of home values that would go up, maybe home values would rise 1%. Well,
So, Anthony,
Let's see what they're looking at.
we can't see your screen.
okay, give us 1 second.
So go down to share.
I'm gonna reshare.
Yeah.
So
that's
you
it.
should be able to see it. Okay. I'm so sorry, guys. Just 1 second. I'm gonna reshare.
Go to screen. That one.
Oh,
Yeah. Share.
okay. Now it's coming up.
어?
And
에어컨디셔너 에어컨디셔너 시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시시 اینجوریه محمد آقا آخرش هم باید بریم ایران
Okay. All right. Again, if you guys could just keep yourselves muted while we're on here, we have about 100 people. We'll try to do our best on our end as well. So we can see here that in 2021, the prediction was that we expect prices by the end of the year to go up by about 20%, right? We all know that this has been the #1 year, the biggest increase in home values in history. This is crazy that prices went up 10% last year, which was amazing, but this year over 20%. It's just unreal. The amount of homes that sold this year was 6.8% more than they were last year. That means that, to me, if you're a realtor, these are numbers that are affecting you and the business you're doing. So the amount of homes that you sold in 2021 should have been even more than 2020, as more homes have become available. Interest rates are going to close out by the end of the year at about 3%. So the few of the big topics that we're going to go through today is, number one, is the tide rising? What is happening overall in our economy? Well, we're seeing more jobs come in. We just got our jobs number back last week, and the numbers are higher than what everybody has expected. More income is happening. More people are spending. We expect this to be an incredible holiday season. More of the regular rituals are happening. More people are going to be getting married. More people are going to be having, kids in the next year. So the tide is rising. Things are looking good for the economy. But there's still some uncertainty with COVID. Of course, that's the #1 factor, really, that's been affecting our market. And I just got an alert a few minutes ago that the Omicron variant is now in California. Well, we knew it was coming. Now it's here. Now we just need to wait a couple weeks and see how serious this actually is. So public service announcement, please get your boosters and get your shots. Okay, number 2. How is housing going to fare over the next year? What's going to happen with sales, with the amount of sales, with prices, with competition? There's so many questions that we have that we're going to be reviewing. Will housing continue to punch above its weight? Let's answer these questions. Number 3, what type of, lasting transitory changes are happening now that are going to be with us for a while? What are those major things? Are some of the segments of our housing market returning to normal? And what is normal, right? In Los Angeles, our market, I feel like we're never in a normal market. But when we say normal, we just say that typically there's more demand than there is supply, but things are on the market a little bit longer. Their prices aren't going up at such an alarming, crazy rate. It's more of a normal market. We kind of know what that is. Number 4, what does it all mean for you as an investor, as a realtor? How are all these numbers going to affect you and your business? And we'll talk briefly about that. So let's talk about this tide, all this good news that's, kind of going through. So the wild card, COVID, something that it's very difficult to predict. Lately we've seen, over the end of the summer, numbers were going down. However, just recently, numbers are starting to go back up. Is there going to be a winter surge like there was last year? When we look at, the winter last year, as of December, the surge was already way up to about here. So it's much, much higher than we are right now. So because of our vaccinations and boosters, we're keeping it under control. But it's still an issue. Here in Los Angeles, we still have our indoor mask mandates, and we still have a lot of restrictions that are in place. I know in West Hollywood, you can't go into any type of restaurant or gym or anywhere without showing your vaccine. So we're going to be in this for a while, and it will have an effect on housing. How is California, basically the economy, recovering as far as the amount of jobs lost? 2.7 million jobs were lost at the peak of the job loss. Now we're still at a deficit of about 1 million, but when you follow the trend growth, we still have about 1.5 million jobs to increase. Keep that into perspective. California's population is about 40 million, right? So, we still have a ways to go, but we're doing much, much, much better. I hope you guys all know this and have understood this. We've been talking about this over the last year, and it's been a clear answer to when people ask, how has housing just recovered so quickly? How come housing hasn't been affected so much? It's amazing with, all the jobs that were lost. I'm shocked that prices continue to rise and there's multiple offers. Well, when you look at the types of jobs that were lost, the ones that are in red are the lowest income earners. So in California, if you're in one of these areas, it's going to be very difficult to purchase a home or a property. The green are the jobs that were lost for the highest income earners. So you can see there's a big disparity between low income earners and high income earners and whose jobs were actually lost and really were hurt. So the amount of the jobs that were lost last year and are still continuing to recover on were the low income jobs. So everyone who's buying a house was not quite affected as much as everyone else was. So that's why our housing market is still continuing to stay strong. Interest rates, they're still incredibly low, right? This is just a chart over the last year and kind of what's happened. Hasn't been too much fluctuation. We had a low point of 2.65. We're at about 3% right now. They've just been fluctuating around 3. A lot of times of the year, a lot of my clients have been able to get just under 3%. A lot of great refinancing happened this year. It's pretty amazing. And when you think about inflation, right, they're saying inflation right now is at about 5% and interest rates are 3%. So that kind of makes me think, well, if inflation's at 5% and we're being given this opportunity to lend money lower than inflation, it's kind of like we're given free money, right? It's insane. So getting a loan right now is definitely a great thing, and putting the money into real estate is an amazing hedge against inflation. Just a quick chart about how interest rates have changed over the years. We all have seen this and know this, and where they were and where they're at now. We're at amazing lows. We're very lucky we're in this market right now. CAR does a study every year on, asking buyers and sellers, like, what are they thinking about the market? What's going on with them? And they surveyed over 1,000 people. And one question that was asked this year in 2021, did the COVID-19 pandemic change the timing of your home buying plan? So this is year 2 of COVID, right? 2021. 26% of the people said yes. It actually moved up my timeline. I was more motivated. I wanted to move sooner. Maybe they wanted to get a place with an office or a bigger yard, or move to a different part of the city. And 23% yes, it delayed it, and 51% said no. So, that's about 77% of the people said we either were more encouraged to purchase a home or it didn't affect us at all. Did you have a change in your preference of property type? That's an interesting question. And 61% said yes. Because of COVID, the type of property that I plan to buy changed. As realtors, we all know that people are looking for office spaces for bigger yards. If they're buying a condo, they want to make sure there's a balcony. Our priorities changed in houses. This graph shows one of those segments that I talked about as far as square footage. From 2018 until this year, until the pandemic started, actually, it was pretty typical. The average size of a home that somebody was buying, it was right around 1750 square feet. Now, since the pandemic started, we've seen the average square footage of a home that is for sale, that is sold, is 1850. So that average, that's a pretty big difference to go up 100 square feet. I don't know, it made me think of, well, 100 square feet, that's kind of like the size of an office. Maybe more people are working from home, so that's what happened. They needed that extra bedroom, extra space as an office. So that could be part of it. But if you look lately, that number, the trend is starting to go down. So in 2022, what will that mean? In 2021, people were buying bigger properties, but in 2022, are people going to be coming back to the cores of the city? Are they going to be buying smaller properties because they want to be in a walkable area again? My feeling is yes, the trend is showing that people now are slowly starting to not need or not want bigger properties, that we're kind of going back to what our average has been over the last several years. So that's really interesting for me. First-time buyers. We still have a huge amount of our buyers in the market are first-time home buyers. 35.5% in 2021 were first-time home buyers. That to me says if you're a realtor, a third of your buyers, you really need to have some great programs to service first-time home buyers. You need to understand what the lending is like for first-time home buyers and have a great partnership with the lender to understand that. So first-time home buyers are 35% of the buying market. There's a strong demand to buy. Now, one graph that I missed putting in here, and I apologize for, was showing the age range of people who are buying right now and what that trend is looking like. So one of the questions we asked at the beginning was, who are going to be our main buyers next year? Well, the answer is the number one source of buyers next year will be millennials. It's finally getting to that point where like I said, people are starting to get married, to have kids, finally getting the millennials out of their parents' houses. Sometimes parents are able to take some equity out of their home and give it to the millennials to buy their own condo or their own home. But absolutely, next year, millennials will be the number one source of home buyers. So, if you're a realtor out there, keep that in mind. If you're an investor, a lot of the millennials may be moving out of rentals into home ownership opportunities. Since 2006, when we had our last downfall, we're just comparing a few things. Obviously, people right now have more skin in the game. A question I get all the time is, are there going to be more foreclosures? I'm going to wait in 2022 because there's going to be a mad rush of foreclosures and prices are going to go down. Well, these stats right here are showing us that that's probably not true. In 2026, as far as the amount of people who had 20% down was 23%. Versus now we're at 32%. But the bigger disparities, this is huge. Percent of buyers with zero down payment. In 2006, it was 40%. By the way, when I bought my first condo, it was 2006 and I put zero down. I was one of those numbers. Now, thankfully, I have a great amount of equity, but when we look at 2021, it's only 2.7% are putting 0% down. That even significantly went down since last year. There's very few people who are putting 0% down. So that means as long as the home prices stay stable or continue to go up slowly, people will be having equity in their home for quite a while. Percentage of buyers who buy with an ARM, I've noticed this in the last few years that because our rates are so great, that trend is kind of gone. Only 1% of buyers are buying with an ARM. 38% in 2006 were. So we have a lot of strong buyers with strong loan products in their homes right now who have equity, who will continue to have equity moving forward. So the chance of having major amounts of foreclosures come is just very, very unlikely. Financial characteristics, first-time buyers, the median price for first-time buyers, their income's about $110,000. Just kind of thought that was interesting to share. And also median down payment, they're about 10%, right? That's kind of what I see too. Most of our offers in our office are 10% or 20%. which is pretty standard, but we rarely see anything less than that. Okay, this has been a huge deal over the last year. Vacation rental, not vacation rentals, I'm sorry, buying vacation homes and buying homes in vacation rental markets, right? So that number actually went up in 2021 as compared to 2020, that we're seeing many more people buy second homes in vacation rental places. We're able to work from home now. We want more room. We want a yard. Why not buy a property in Joshua Tree? Why not buy a property in Lake Arrowhead and work from there for a while? You know, how many of you realtors have done a deal or referred a deal out to someone for one of these locations this year? Big Bear, Lake Arrowhead, Palm Springs, Palm Desert, even more than Palm Springs, prices and demand has increased at such a high level over this last year. Okay, this graph is really telling, especially for all of us who are in Los Angeles, that there is a really strong market in the million plus homes that are for sale. So if you look right here, this peak, right? This is in 2021. We've never seen anything like this. This shows the demand, the number of properties that sold at different price ranges. When you look at this blue line and the gold line, the top two, for the largest year-to-date change in sales was for $1 to $2 million and $2 million plus properties. That before the pandemic, we all knew that the demand was slowly going down, prices were slowly coming down in our luxury markets. Well, the complete opposite has happened during COVID. And this year in particular, it really spiked over the summer. Over the summer, we were so busy and that luxury market was really, really on fire. You know, the demand has slowed down now, but it's still the top two as far as the amount of increase. It's still 1 to 2 million and 2 million plus. For the very first time ever, we've seen more homes that sold over $1 million than under 500,000. Just this year, you could see the convergence right here where that happened. The very first time, and I think we're going to continue to see that as prices go up. I mean, this was a pretty big change right here since COVID happened, and it really, you know, switched just since, you know, 2021. It's not necessarily because prices went up so much, but as you saw in this last graph, it's because the demand for 1 million plus properties was higher than the lower properties. I know for myself that my lower priced condos would take longer to sell than my higher priced condos. The demand was not the same. So it could be, again, because of the people who lost their jobs and the incomes at the higher levels were still there and improving, and people at lower income levels were not changing as much. That may be a part of it. This graph also is showing us, you know, this nice teal dots kind of shows us the trend that basically the higher price home you have, the more demand there was for it this year, and the more percentage change of sales actually happened for that. So it became busier and busier and busier in our luxury markets. Now, this next graph or next chart is really going to show us a little bit about where those areas are in Southern California. So all the green areas are areas that increased their demand substantially. The yellow are areas that had a slight increase in demand, and the red were areas that had a decrease in demand. So you could see here, Palm Desert had a strong increase in demand. Indio. Palm Springs had an increase, but not as big as Palm Desert. Coachella, less. Yucca Valley and, Joshua Tree are green, you know, a high demand there. Pretty much all of our greater LA area is in the green. Parts of the valley are as well. So sales are increasing at the, like we said, at the higher price point. So the Bay Area, Central Coast, Southern California, the areas that are the least affordable, the areas that are the most desired are strangely doing the best. So, as people, I think this is kind of an important concept to really grasp, because those areas where we are in Los Angeles, those are the areas that are outperforming the rest of the state. Another quick thing that I noticed here, when we look at where are we at, I know West Hollywood is on here. The current median is 775, days on the market is 21 days. Percentage of properties selling over list price is about 33%. And the sales growth is 57%. So it's been a very, very active market. One thing too I wanted to mention about the luxury market before we move forward is I was having a meeting with one of LA's top architects yesterday, and he does a lot of luxury homes, the $20 million homes up. And he said, oh yeah, a year ago, 2 years ago, right, as COVID was starting, everyone was confident that the $20 to $30 million luxury market was going to tank. There was way too many houses being built, that the demand would just not be there. And it was a time that people were considering to not build large properties any longer. Well, what we've seen happen over the last year is that demand is still there. They're selling them. They're selling for more than they sold for before. So I think that trend in LA will continue, where we're going to see more large, super luxury homes being built. That market is still strong. So what exactly is slowing now? We've all kind of heard okay, well, the summer was the peak, was the busiest, and now it feels like things are slowing down. Maybe, I don't know what's kind of going on. When we ask buyers, what do they feel? Their confidence level has been dropping all year, and it's the lowest right now. This is October's numbers. It was actually 15% of buyers said that it's a good time to buy. I think, a lot of them have burnout. They know that prices have, continued to go up, and it's becoming harder and harder for buyers to get into the market. Interesting for sellers the last few months as well. I think, let me see, the last number I have is about 66% of sellers believe that it's a good time to sell, which that has slowly been going down. Just kind of interesting. So confidence is still high, right? This is higher than it's been over the last several years, which is, for me, the thing to look at. Not so much the trend, but basically, in 2021, confidence level of a seller has been higher than it's ever been. So we shouldn't really have sellers that are on the fence of wanting to sell. It's either they're going to sell or not if they need to. Pricing and timing is great, but buyers are the ones that we may have more of an issue with, because their confidence level is much lower. And my kind of script on that, as far as working with the buyers, is look, we'll talk about that after, when we talk about what's going to happen with interest rates, because if interest rates change, that's completely going to affect the affordability that buyers have next year. Other things that are slowing, I know we have some of my favorite mortgage loan officers that are on the call today, but they tell us every week at our meeting that the demand is slowing down a little bit, and we can see just a little bit. Numbers are getting less. These are mortgage applications mortgage applications that are coming in. One of my Marty Carey at Arcstone is one of my favorites, and he mentioned to me that maybe they're slowing slightly now, but we're seeing more cash deals that are happening because the amount of sales that are closing aren't changing that much. So that's definitely something we want to look at. But we are seeing that mortgage applications are slowing down slightly, not at a huge rate. And then also you can see existing single-family home sales, that it does tend to mirror what's happening with mortgage rates. It's a little bit of a push, right? So as the numbers are going up here, we see them go up over the next couple months, and as they go down, we see them go down over the next month or so after that. So there's a little delay, a little lag in existing single-family home sales. So it's something good to look at. If you hear from a lender that mortgage applications are going up, then probably in another month, the amount of properties that close or enter escrow also will be going up. So if you have a relationship with a lender, they have their pulse on that. Ask them what's going on, so we can kind of predict quarter by quarter what's happening next year. Pending sales. are continuing to drop. So there's not quite as many sales that are happening. So this is the numbers from September. I also looked up October, November, and they are still continuing to drop. So for the third month in a row, no, now for the fifth month in a row, pending sales have dropped. It doesn't mean necessarily that there's less demand, right? You have to think about that. It's just that there's less properties for sale and less inventory. So there's less to choose from and less properties are entering escrow. So that's really what's happening there. And you know, this is kind of interesting, right? This is the number of homes that have sold, you know, year over year. And that's starting to slow down. We saw our peak, you know, at the beginning of the year. And then as this year's gone down, basically we're not doing as many deals this year as we did last year. This was our big gap right here in the center where COVID was kind of at its worst. And I think the reason why right here, these high numbers that were happening, it was just basically replacing the demand that should have been filled into here. So the gold line is kind of where our average is. And I think we're gonna get back towards where that average is. And you're gonna see with economists that that's what they're predicting too, that we start getting back to where that average is. So if that's the case, then it's a good case that home sales next year will be a little bit less than they are this year. There won't quite be as many deals sold. So making it a little bit more, a little bit less deals that are sold. You know, however, the slowdown that's happening with demand for Los Angeles is not quite the same as the state. We're definitely outperforming what the state is doing. There's a very slow, you know, decrease in the amount of deals that are closing in Los Angeles. And again, we always have to look at our local numbers to see what's going on and know your neighborhood as well, because what's happening in West Hollywood and what's happening in Los Feliz are going to be slightly different. So sales aren't the only things that are, you know, reverting back to our, what we say, more of a normal market. But, you know, the amount of inventory that we have has slowly increased. The beginning of the year, we were at its absolute lowest, and it was really rough. And then we saw that in the summer as the inventory was still low and the demand was high, and it caused those high numbers to happen as far as price. Now, you know, our inventory is a little bit better, so buyers have a little bit more option, but it's still much lower than we want. You know, we all know that a lot of people are staying in their homes, they're fixing them up, they're remodeling, they're adding ADUs. They're just not able to afford to move up. That missing market is the move up buyer. We just don't have a lot of move up buyers. I'm hoping that, you know, through next year, because this tide, this great economic tide that we're riding where things are getting better, we will start to see more move up buyers as people start having kids again and starting families and, you know, settling in, that we will have more move up buyers and that may increase inventory. But as of right now, we're still low. We're still like half the amount that we were back in 2018. So inventory is tight. We have a long way to go before that starts to increase. You know, it's still a seller's market and a hot market, but it's not quite as hot as it was, right? I think that's what we're kind of all feeling as realtors. This right here is showing the amount of homes that sold over list price. You know, we were up at the height at 62% of them were in the summer, and that's slowly dropping. There's not quite as many multiple offers. It depends on the price point and area, right? But that overall, the amount of multiples that are coming in is less. Days on the market is starting to increase a little bit, but it's not too much. I mean, hey, 10 days on the market is still a really hot market. We need to get it back to 60 days on the market to me what's more of a normal market for Los Angeles. 10 days, we still have a long ways to go. So it's still a very strong market for sellers. Median home price, you know, we hit kind of a peak this summer, but it started to go down a little. And when I look at the numbers now in October, November, they're actually going back up a little bit. So this year is really going to be a record-breaking year. You know, we're anticipating, like we said at the beginning, that home values have increased by 20% in most areas. And it might even be a little higher than that. So that would just really be incredible. So we'll have to see what that's going to look like. So we're entering, you know, a new normal of an era, and this is, you know, this is interesting as well, where we ask, you know, as far as sellers, when people sell, what percentage are moving out of California? And that's this yellow, right? So we've had the highest number this year. 35% of sellers are moving out of California. So a third of our deals are moving out of California. That's kind of rough, right, for us as realtors, because you know, if they're moving out of the state, we're not getting that other deal. So if they're selling, a third of the deals are moving out of state, and we need to have those relationships with realtors out of state strong, so that we're able to get referral fees and help our clients find the best realtor if they're moving to Idaho or moving to Florida or Texas or Arizona. You know, have those strong relationships and make sure that you guide your clients to finding great realtors in those other cities, because we all know not all realtors are created equal. So help your clients out if they are moving to another state. So that's a big lesson, right? Moving forward, I think that number is going to continue to go up over 2022. So develop your relationships with realtors in other areas. Also, the number here to moving to the same county has hit its lowest number, right? So people that are just moving from LA to LA has hit its lowest number. Now, to me, that you know, moving from LA to LA at hitting its lowest number, that kind of proves the point I was saying, where we're just missing those move up buyers, right? Where people aren't moving from a condo to a house yet, or from a house to a bigger house. There's just not as many of those as we used to have back in 2010, 11, 12, 13, 14. There's a lot less of that that's happening right now. So the amount of repeat deals or second deals that are happening for realtors is less. It's a more challenging time. You need to have more solid relationships than you used to. It's definitely one of the most difficult times to be a realtor to really get deals. So housing, right? We all know the story. The amount of housing that's being built is just way under what we need. The estimate of housing that we need to kind of keep us at a normal market is 180,000. You know, we only hit that for 3 years, about, what is that, 5 years since 1988. We have this huge gap to make up. We're slowly increasing the amount of housing being built. A lot of state laws are helping us to do that, but we're just way, way behind. And because of that, we're going to have this huge demand for housing that can't be met, and it's going to absolutely affect prices. So, you know, if people are thinking we're going to have a big crash, again, this is another graph that's showing that it's probably not going to happen. There's not going to be a lot of pressure on downward home values. So years owned, people are staying in their homes longer than they used to, right? When I used to teach classes as far as like what a turnover rate was for Los Angeles, I'd always use 7. And then, you know, I would say, okay, maybe it's at 10. Now we're at 11. People are staying in their homes on average 11 years before they sell, and that's on average. So, you know, people aren't selling as often. So if you're a realtor who has a farm, there may be less deals that are happening from that farm area, and your return is less because there's not as many people that are selling. We know that inventory is low. People are staying in their homes longer. So again, this graph in 2021 just reiterates that 11 years is the average for 2021. Now, people are staying in their homes, right, because they have a low rate on their current mortgage, maybe low property taxes. Well, I guess we can cross that one out because Prop 19 has passed over the last year, and we really need to do a better job as realtors in our communities informing people that, hey, if you're over 55, you can transfer your property tax base anywhere in the state to your next property, you know, with a few little stipulations. So the low property taxes shouldn't be an issue now. We're hoping that more people start to move because they can transfer their property tax base and there's more deals that are freed up. But we need to do a good job as realtors as far as informing people. All of the press, everything that I hear from attorneys and networking groups that I'm a part of, is that Prop 19 is awful because of the inheritance, and it makes, you know, the transferring the property tax base to the inherited not happen any longer, and that's what everyone's focusing on. But we have to remember that the good part about Prop 19 is that it allows people to transfer their property tax base 3 times when they're over 55 to anywhere in the state. That was not allowed before. It would only be at once, and it would only be from certain counties, and you couldn't buy a more expensive property. So this is a great proposition that passed in that sense that we need to talk more about. So if you don't know much about Prop 19, go to our YouTube page at the Collective Realty. We have a whole segment on what that really means. You know, people may not want to sell because the capital gains hit. It's huge, right? Where can we afford to go? We're remodeling, we're going to stay. You know, we thought a lot of baby boomers would be selling over the last couple of years because they have 2-story houses and they want to, you know, move to a 1-story house or downsize. We just don't see that happening yet. People are remodeling, they want to stay in their home. It's keeping our inventory short. So it's an issue. Hopefully some of this will change, but that's the reality where we're at right now. Affordability is a big picture that's deteriorating, even with low rates. We had a point in January of this year where it was actually more affordable to buy in January than it's been over the last, you know, 5 years, because it was just that sweet spot of where prices were and where rates were, that it was the best time to buy. So if you're out there and you bought towards the beginning of the year, you had clients did, that was the best time to buy. Right now, it's starting to go down again. It's becoming less affordable, and we predict in 2022 that number is going to stay around 23%, that it will, only about 23% of people in the state are going to be able to afford to purchase a home. We want that number up. We need more homes built to help with that. You know, we all know how this is happening. Population has gone up quite a bit since 1986. The amount of realtors has doubled since 1986. California building permits has shrunken less than in half. And the amount of home sales just really hasn't changed. So we have this huge demand still for housing. We're just not building enough. And then if you're a realtor, I mean, it's rough on us, right? Because the amount of properties hasn't changed. The amount of realtors has doubled. So, you know, we have half the amount of transactions available to us as we did before. It's most competitive market for a realtor as it has ever been. So, you know, I know we have a lot of realtors on this call. Let's talk about kind of them for a moment, for a couple slides. And, you know, how is this really going to affect you guys? So, you know, we talked about the rising tide and everything's great. And, you know, whenever I'm out, everyone tells me, wow, you must be doing amazing and have had an amazing year as a realtor. You know, the market is hot. You must just be killing it and just doing so well. And everyone assumes that all of us as realtors are treated equally and everyone is having an amazing year because properties are selling quick. Well, that's only true for some, right? This year, we don't have the numbers here, but this year it's about the same, where about 2/3 of the deals are done by the top 20% of realtors, right? And when we kind of break that down, what that means is, you know, if you're in the top 20% of your office or of your realtor board, you know, you're doing a little bit better this year, which is great news. You have about a 16% increase in the amount of income you should have made this year on average. Hopefully you're doing even better than that. But if you're in, you know, 8 out of 10 realtors are making less money this year. 8 out of 10 realtors, you know, the amount that they've actually closed is down 16%, and their average income is $35,000. So, you know, when you kind of break that down even further, the top 20% of realtors are doing about a deal a month. When you look at the top 5% of realtors, so just 5 out of 100 are doing about 20 deals a month. So there's very few who are doing a lot of the deals. If, you know, 8 out of 10 realtors are doing less than 2 deals a year. So there's a huge disparity within our industry. Not all realtors are doing well, but there is that opportunity if you are in the top 20%, top 5%, even better, that you're continuing to gain market share and do better than everyone else. And I think a lot of that really has to come down to the value that we give as a realtor. If you're one of those top realtors, you're giving value, you're giving something back to your clients. If you're in the bottom 80%, you're probably not. You're probably a transactional realtor who's just looking to close a deal and collect a commission. You're not going to survive in this industry and business if you're one of those realtors. You have to be a realtor of service. You have to exceed the value that a client expects. You have to know what your client expects from you. So many people don't even ask their clients, what do you actually expect from me? They just assume. Not everyone expects the same thing. So it's really that time for all of us to step up our game, to make sure that we're providing more value than ever, that we have long-term relationships with people in our database, that we're, at my office, I really preach, we have to create paths to wealth through real estate. And it's not just helping people buy and sell homes. It's educating them about the ADU process. How can they build wealth through ADUs? If they're investors, what can they do to refurbish their property, and how much more can they charge if they're putting laundry in their rental units, and so on. And really understanding all the different nuances that property owners are dealing with in order to help them to protect these amazing investments and assets that they have. So we need to become wealth builders and not property finders. Every property is on the MLS. Anyone can find a property. Please, realtors, shift your mindset, shift the message that you're telling your clients that we are not property finders anymore. You will probably find your own property online on your own. Maybe I'll find it, but my value is much, much greater than that. I'm going to make sure you're not overpaying or underpaying in order for you to get a property. I'm going to help you with the negotiations. I'm going to really understand, your financing options. I'm going to really understand what inspections you should be doing, and looking at the property. Is this a good deal or not? Not just trying to close a deal because a commission is in store for you, but really understanding the big picture of helping that client build wealth. We really, really need to do this. If we want to protect this amazing industry we have, you have to become wealth builders. And, I'm so proud of everyone in my office who's been really taking that on and becoming that. So just my little soapbox. I'll get off now. Okay. Now we just have a couple slides left. We're just about ready to wrap it up. So the economy basically is going to be doing better. We expect the GDP to go up by about 4% next year. Job growth actually to continue to go up by 3%. Unemployment to go down. These are great signs that we have. Non-farm job growth by 4.6% in 22 is a prediction. Unemployment to go down to 5.8%. Great numbers. Okay, so the next slide I have is basically the one that you're going to want to maybe take a screenshot of or write some of these numbers down, because these are the predictions for next year based on many economists, of housing experts from CAR, from UCLA, from all over. And here we go. So single family homes resale, right? This is not the best news, but not the worst, but we expect that the amount of properties that sell next year is going to go down by about 5%. There won't be as many properties for sale that close next year as opposed to this year. The good news is that this year we went up quite a bit. We expect to go up by 6%. So we're kind of just flattening that number that I said, going back to kind of what that normal number is. Close to 400,000 is kind of what the average is. We're trying to get back towards that number until we have a significant amount more properties that are built and more people that are move-up buyers. This number probably will stay around there. So it's not the worst news. We're just trying to get back to around where that $400,000 level, $400,000 sales number is, and stay around there. Median price. Okay, are prices going up next year, or are they going down? What did you say on that survey? Well, economists say that they're going to go up by about 5.2%. That prices will continue to rise, but at a much slower rate. This year, we had a record-breaking year. Prices went up faster and higher than they ever have at 20%. I really think this number is even going to go up a little bit more because December's still looking so strong and inventory is so tight that this number may be even higher. But next year, the prediction is that prices will continue to rise, okay? Housing affordability going down. Less of our database, less of our clients, less people are going to be able to afford to purchase a home. That is not good news. We really need to make sure that the people who are able to afford a home know all the different lending programs, know all the first-time buyer programs that are available, and that we're really teaching people and really working hard to get those first-time home buyers into their own wealth building process and stop paying their landlord rent and stop building someone else's rent. It's time to build your own rent. Let's get those first-time home buyers on a path to getting into home ownership. Whether they buy next year or the next 3 years, there's still things that they can do to fix their credit, to start saving money, to start getting onto that path to buying homes. We're so lucky right now, we have FHA loans that are still available, where someone can buy for 3.5% down. The FHA loan limits have just gone up. Talk to your lender about that. I think they're like, they just keep going up. And for Los Angeles, they're amazing. You can buy a duplex, a triplex, even a fourplex with an FHA loan if you plan to live on it. There's amazing opportunities there, I think, for first-time buyers to purchase as far as wealth building opportunities for them next year. And okay, here we go, rates. Basically, everyone that I'm hearing all over is saying that rates are gonna go up about 0.5% next year. Okay, so let's look at these numbers a little closer. If rates are going to go up 0.5% next year and prices are going to go up 5% next year, that is why housing affordability is going down. That's why the longer a buyer waits to get into the market, the less affordable it will be, the harder it will be. So if there's anyone that you have in your database or any of you out there who are thinking of buying, the longer you wait to get into the market, the more unaffordable it will be. The sooner you get into the market, the better off you are. So even if that means possibly getting into the market, at a low, down payment program right now, and then refinancing in a couple of years and changing it out and getting rid of your PMI later, that may be a good strategy to do. Talk to your lender, figure that out, because next year prices slowly go up, interest rates slowly go up. I'm sure properties will sit on the market a little bit longer. Days on the market will go up a little bit. The longer a buyer waits, then the more unaffordable it will be. So get your buyers off the fence, let them know and see these numbers. Take a screenshot of this, write these numbers down, let people know what's going on. For sellers, it's still good news. They still are going to be keeping their property values high. They still have a great opportunity to sell over the next year. So if anyone is thinking of selling, we're still kind of at a height of the market, right? These numbers aren't going to go up forever. At some point, they've got to change and they've got to come down a bit. Many people were thinking, well, is it going to be next year? Well, according to the economist, probably not. In 2023, maybe we'll see a decrease at that point. But as of right now, we're really not seeing that happening at all. So, we have all these different external forces that are converging. The great news is the economy, the tide is rising, things are looking up there. Hopefully we have COVID under control and this new variant isn't going to cause big issues, but again, we need to watch that. Buyers are wanting to buy. We see that when they come into our open houses, how desperate they are to get into a property. They know that it's the #1 way to build wealth in this country, and that demand is still strong. It's still the American dream. That's still continuing. The market is still attractive for sellers. Rates are still going to be great. Yes, they're going up 0.5%, but that's amazing still at 3.5%. I mean, we can't really complain about that. Sales are going to stay solid. Yes, they're going to drop 5%, but we're still hovering around that 400,000 unit mark, which is still a strong market. And home prices are going to keep rising. On the bad news side, we're not building enough. We don't want prices to keep going up forever at such a high rate. We need to build more. Us as realtors really need to advocate for that even more. COVID really made it worse. Less and less was being built. There's still big challenges for first-time home buyers. Small rate changes are going to hurt more than we think, right? Going up 0.5% makes a big difference. You know, it's gonna make a big difference. That's why the affordability is going down. So, you know, our industry has a lot of disruptions and changes that are happening and accelerating, and all kinds of weird stuff going on that we need to really pay attention to. But, you know, overall, we look to have a strong year next year. You know, I'm curious to see how you all did on those price predictions and how all of that went. I'm so honored and so grateful that you guys came in and joined us. Hopefully this is going to help you to have an amazing year through next year. If you love this class, our next Zoom that we have coming up is going to be on crypto and real estate. Yes, people are buying real estate in Los Angeles with crypto. That whole market is super interesting to me, and that's absolutely something that you're going to want to pay attention to. That Zoom is going to be on December 16th at 2 p.m. This link, the collective RSVP, will be live about 10 minutes after this session is over. I just need to swap over the forwarding of the domain name to our new RSVP, but I'm going to put in our chat the link if you want to RSVP for that. You're absolutely invited to come, and I will invite anyone, if anyone has any questions, to raise your hand, and you're welcome to stay on and we could chat for a little bit longer. And again, thank you guys so much for coming in today.